Looking at the Markets with David Modell.
Welcome to Looking at the Markets with David Modell. I'm back again with my very frequent and one of my favorite guests is Mr. Seth Golden from the Golden Capital Portfolio and phenomgroup.com, which is in progress. But we're gonna talk about that, and we're gonna get the link below in the description, as well as you're gonna see it right now on the video. All right. So, Mr. Seth Golden, welcome back to Looking at the Markets.
Thank you, David. This is one of my favorite forums to participate, and I feel like we always get a chance to reach investors and discuss really thoughtful topics.
Yeah, I think it's great. We've spoken about volatility products. We've spoken about Fitbit and retail in general. You're an expert in all those things. You study them for hours and hours, I think on a daily basis, if I'm correct. You get up pretty early, and you
Sickness.
Right, you watch the pre-market and the post-market and all day, so that other people don't have to. And you're tweeting, you're on StockTwits, and you've got phenomgroup.com, which we'll talk about. Today we're going to focus on some retail stocks, Macy's, Penney, that kind of thing. But we could take it wherever you want. So let's talk about the earnings reports that came out recently. The prices surged post-earnings for both Macy's and Penney, which may seem like great news for everybody, yay. But it was kind of mixed news, wasn't it? One of them had the guidance lower, but they beat on the revenue. Can you straighten me out on that?
Okay, yeah. So Macy's beat on their earnings, their EPS. They beat on their EPS, but they missed the mark when it came to their revenue guidance and the revenue estimates from analysts. So they missed same-store sales and they missed total net sales. They didn't miss by much on total net sales, but nonetheless, a miss is a miss. And they, two out of 3 quarters this year, they've missed revenue estimates. Penney had kind of the reverse situation where they beat on their revenue estimate. They had their first positive same-store sales comp in a number of quarters, but then they missed on their EPS estimate. And the reason why they missed there is because in order to get that same-store sales comp, they had to liquidate a good deal of their apparel assortment, mostly in the women's segment. So, either way, what I guess investors saw in the reports were some areas of green shoots, if you will. For Penney, the first positive sales comp in several quarters. Okay, let's run with that, investors. For Macy's, well, they beat by 2 cents on EPS. It wasn't a disastrous quarter so far as sales, so it didn't necessarily deserve the $17 handle that it had recently been trading at. And let's buy Macy's. So that's basically what we saw, I believe.
It's so funny how these earnings results turn out. Sometimes they're the actual price action post earnings is totally divorced from reality. It's just based on sentiment. It's based on information or misinformation, as the case may be. Macy's missed sales on sales expectations in the third quarter. 2017, and in 2 of the last 3 quarters. Are they doing anything to reverse this trend?
Yeah, they have a number of different initiatives in place. But, what I really want investors to concentrate on is, are those initiatives actually incremental? Will they drive long-term sales growth in this kind of retail environment that, is experiencing a seismic shift from brick and mortar to, e-commerce or even bricks and clicks? So, some of the initiatives they have in place are backstage, which is kind of like this, take, for example, a section of TJ Maxx or Ross stores, and you put it inside of a Macy's. It's got that treasure hunt feel. It's a lot of discounted closeout goods. But the problem is it's only in 38 to 40 stores right now. Macy's has well over 700 stores. How do you actually scale that quickly enough whereby you can actually bridge a gap, with your, same store sales falling. How do you scale it and not, impact your gross margins? Because in order to implement that concept, that backstage concept into, the totality of the chain, it's going to cost. It comes at a cost, and largely the shareholders, tend to shoulder that cost. It comes out of gross margins, CapEx, etc. So another initiative that they have and they continue to expand upon is mattresses in stores. They've been expanding on that for the duration of the year. And then they have this loyalty program. And they've been playing it up pretty nicely, headlines and things of that nature. And they're kind of leaning on that as being a driver of growth going into the fourth quarter and beyond. So again, here's what I encourage investors to look at. How is Macy's loyalty and rewards program any different than all the other retailers? Target's got one, Penney's has one, Kohl's has one, Kohl's Cash. They all have them. So what makes this one special? And when you look at the details, nothing. There's nothing special about it. So how do you actually differentiate yourself? How does Macy's differentiate itself from all of the other retailers that have similar type programs? The reality is you can't. You're just playing catch up with all these other retailers. Even Bed Bath & Beyond now has their own credit card and a rewards program on top of their 20% off coupon that goes out all the time. So, the game right now is to capture market share. And if you're doing what everybody else is doing, there's just not an incremental driver there, for sales growth. So I think we hit on 3 initiatives that they've, embarked on. And then, of course, there's just the merchandising and assortment that they continue to recycle or augment to, suit their customer and drive more traffic to the store. But again, that's just a normal operation. Retailers don't just keep the same assortment around for the sake of keeping it around. They're always changing their assortment. So again, we don't have something that's a different operation than what all the other retailers are doing.
Sure.
It's much of the same thing. So, that's 4 initiatives that I can't really, figure out how they think of this as fresh and new and something that will drive, a reversal of this 3-year decline in sales and profits to boot. So it's all well intended. These are the things that they have to do, not to mention, what they're doing online, and their online business has been fantastic. I mean, it's grown double digits in 33 consecutive quarters. You can't knock that. That's just great. But it also serves to highlight that it's just not big enough. It's not a big enough business for Macy's to lean on. 85% of their sales are still done in store. It's still done in store. So you can pat yourself on the back all you want with 33 consecutive quarters of double-digit e-commerce growth. It doesn't bridge that gap in what's, your declines inside of stores. So they're trying, they're trying their hardest. I think from an investor's perspective, your best thesis at this point may be just if the bar is low enough, maybe get a beat here and there, but long term it's difficult. It's a difficult environment.
Yeah, a lot of hurdles there. I remember you warned investors not that long ago about how Macy's, in the past couple of years, has gotten into real estate sales, of all things.
Right.
You tried to warn people. I hope they listened. Has this situation improved at all? Can investors expect anything meaningful from Macy's real estate gains?
I think it'll improve the balance sheet, so the capital structure will be better for Macy's. But the reality is there's never been a time in history where a retail operator was valued on their real estate assets. Whether they sell them outright or create a leasing structure for that asset, it doesn't filter down to the share price. The share price has always been about the retail operation, your core business. And that reality is no more validated in the fact that, Macy's has sold, I would say, close to 10 or so properties over the last 18 months, maybe. And for each asset sale, share price has only found, new lows. So I would say if that's your thesis as an investor, you need a new thesis. But again, it does help the balance sheet, which may kind of curtail the notion from management to cut the dividend. But even so, that's not where you really want to be leaning on as an investor. I mean, you want the core business operation to strengthen, and that's the sales, the retail sales.
Yeah. So is there anything that the people in charge of Macy's can do, or that you would do if you were in charge, to drive more traffic to the Macy's stores, to improve sales? What can they do?
Yeah. I mean, in this day and age, you've got to appeal to the millennial shopper. You have to. We have the demographic splits, and I guess you could say addressable market that Macy's has always captured was that upper middle to upper income demographic. But as that demographic within the baby boomer generation falls off with their spending habits, they're not replacing them with the millennials. The millennials, just by and large, that is not Macy's customer. And that's a big problem. So they have to figure out whether it's in their marketing, their merchandising strategy, what the look and the feel of the stores are, and some type of experience to put inside of stores that will, drive Gen X and millennials into Macy's. And until they do that, I can't see how this trend reverses permanently. This trend in declines reverses permanently. So, one of the things that I think they can do is, put one of these, small square footage type shops in all of their stores, kind of like what Target did with Starbucks and the Pizza Hut, and, that whole cafe concept. If somebody's not necessarily, going into Target to buy a blanket or, something of that nature, maybe they're stopping in to buy Starbucks, and then they do a little shopping. So they need something like that. And from what I understand, Jamba Juice is willing. Jamba Juice has actually been in discussions with retailers over the years because they don't need any more than 100 square feet to put up a fully operation Jamba Juice inside any of these retailers, and they have that square footage to spare. Annie's pretzels, Cinnabon, all of these would be nice additions, that give the consumer an experiential aspect to shopping at Macy's. And right now they just don't have that, and nothing that they seem to be doing is going in that direction. And then the last thing I would do is, a lot of their problems stem from their goods are weather related. They've outlined on a number of calls consistently, our sales were impacted by weather during the quarter. Our sales were impacted by weather during the quarter, on and on and on. So they need to find a business segment, a product segment that isn't so much, impacted by weather. A good example of who's doing that is JCPenney. They're not, their results aren't, very strong as a whole right now, but they have embarked on that process to delineate their, merchandise from the weather impact. So Macy's needs to do that, but can they? We're talking about a company that has scaled this business model over decades and dedicated to a very, select consumer group. JCPenney put appliances in their stores. I don't necessarily know that a Macy's customer would appreciate that. So these are headwinds. These are real headwinds. What can they really do? So
Yeah. Speaking of J.C. Penney, if we can shift a little bit, J.C. Penney, they beat sales but missed earnings. The stock price went up anyway because you never know with these things. But they lowered guidance, and this is not the first time they've done that recently.
Right.
So what's going on with J.C. Penney? Can we have any positive expectations with them?
Yeah, I mean, if I compare the Macy's and J.C. Penney's, while Penney's is definitely in a more precarious situation with their capital structure, the things that they have already, put into place, they seem to work, and they seem to be in line with the future, the future of retailing. But specifically what happened was 2 weeks prior to this the Q3 announcement, they had pre-announced. They pre-announced and, with a really bad expectation on their adjusted earnings as well as sales. But towards the very last days of the quarter, they actually had a dramatic improvement in sales that they themselves didn't even expect. They ran this really big sale where a lot of the merchandise was 60% off. It's like their annual, big 60% off sale. And consumers just flocked, whether it was because of the post-hurricane effects or, just an anomaly. We'll never truly know. But when they actually did report their their earnings results, they were dramatically better. And the sales results were dramatically better than the pre-announcement. So, investors were like, holy cow, this is a lot better than they said it was going to be. And this, the stock took off to the races. Having said that, in order to get those results, they had to discount, huge discounts at the cost of, gross profits. And, the earnings were, pretty bad as a whole. And on the entirety of the year, I mean, they dropped their adjusted earnings expectation some 85%. Prior to this earnings cycle, they had forecasted between 40 and 65 cents in adjusted earnings. Now they're only expecting, I think it's 2 to 8 cents in adjusted earnings. So, I mean, that's a big, decline.
Yeah.
Yeah.
Yeah, and is JCPenney doing anything to try to correct this, the earnings situation, the sales situation? Is there anything you would do or would recommend to them?
Yeah, I like the initiatives. When I look at the Macy's initiatives and I look at the JCPenney's initiatives, I see a very contrasting play here. And I really like what JCPenney's is doing. They're disconnecting a lot of their merchandise from the impact of weather. If you need a washer and dryer because your other one broke, it doesn't matter if it's raining outside. It doesn't matter if it's snowing outside. You got to get that washer and dryer, refrigerator, what have you. So this is a good move by them. And they've doubled their appliance business year over year. Now some stores don't have a year over year, but the ones that do grew 30% year over year. So that is working for them. That was a good move by them. They added toys, an entire toy department. It's not as big as what you find in Target or a Walmart, right. But it's a good sized toy department. And again, this gives the consumer, they have a much bigger, target audience, addressable market because they cater right. to, the lower to middle income shopper. They have that price point. Sure. So they have a bigger audience, and now they're giving that audience more merchandise, to work with. So instead of, let's say I want to go buy just a shirt, I'm out and I need to buy a shirt or a couple of shirts. There's Macy's and there's JCPenney at, both at the opposite end of the mall. Yeah. My daughter, I want to, pick up my daughter a toy or something. I can't do that at Macy's yet. I can do that in the JCPenney. So, that's something that's going to work long term for them. Yeah. The other thing that they have going for them that continues to produce positive results is Sephora, their in-style beauty salons or haircuts and whatnot. And their that whole concept is working really well. The cosmetics, Sephora, fine jewelry, and in style. That whole collection is something, again, that Macy's doesn't offer. You can get cosmetics and fine jewelry at Macy's. You can't get in style. You can't go and get your hair cut there, or dye my tips and roots and what have you. So
Right.
I think that's an experience. These are experiences that the consumer is getting from JCPenney. So I think that's a positive. On the same token, they went through the process where their women's collection just wasn't selling. Negative comps, and they had to overhaul the whole category, and that spans into the men's category as well. We don't know if that's going to work. You don't know that this collection will do better than the last collection. This is just a constant battle that retailers face, is selling through their apparel and making sure they're in style, on trend. You just never know, and that's the biggest part of Macy's business as well as JCPenney's. So we can talk all we want about Sephora and cosmetics and fine jewelry. Look, 75% of the sales are apparel.
Yeah.
If you don't get apparel right, it doesn't matter what you do in all of these other categories. They just can't give you the lift. So
Sure.
I do like, what JCPenney is doing. They're doing flooring, HVAC as well. I think these are all, this is a good way for them to diversify and grab market share. And that's, again, what we talked about earlier. It's about getting market share. I don't know that Macy's can do that with their demographic issue and what their shoppers expect to see and feel when they go into Macy's. Ron Johnson, when he came into JCPenney's back in 2011 or 12, he said, I don't care what JCPenney shoppers wanted in the past or want in the future. We're going to overhaul everything, and this is what they're getting. It wasn't the smartest move, but it set them up for, from 2013 to 2015, they stacked positive comps, for 8-9 straight quarters. It gave them some wiggle room. From there, however, they still had work to be done, obviously. And that's where the new management came in and said, okay, appliances, we're going to beef up Sephora, expand, jewelry, cosmetics, and in-style, get into flooring and HVAC. They're doing all the right things. It may just take time. JCPenney's and they have the time. They have a very poor capital structure. They're riddled with debt, which also impacts their earnings. But they're in no dire straits. They have liquidity way out to 2020, and if you give them that much time without the drag from unprofitable stores that they closed 140 stores. So you no longer have that. We could be looking at positive sales growth and positive trending earnings going out into 2018. One more thing I want to say on the first positive, sales result out of JCPenney in a number of quarters. It's artificial. Why is it artificial? Because, again, we don't have those negative performing stores anymore. That's completely off. So all of a sudden, you're just dealing with the, better stores. When you eliminate the negative 5% of the chain and you're only working with the positive, you should get a positive result. So it is somewhat artificial in nature. The true tale of JCPenney's sales won't come until next year, when you have true year-over-year understanding of existing store base.
Gotcha. All right. So bottom line, because I know that people who watch Looking at the Markets, they love the bottom line. The takeaway is, let me guess if I got it. Let me see if I got it right. Macy's more cautious as an investor.
Yeah.
Maybe just wait and see, wait and watch, keep it on your watch list. JCPenney, a little more bullish, a little bit more optimistic, and the retail sector as a whole, I don't know. What do you think? Tell me if I'm right, and how do you feel about the retail sector generally?
If you're in J.C. Penney or Macy's, if you own these stocks, or if you own both of them, I would not be allocating more capital. I mean, who wants to be in a position where they're equal to overweight these battleground stocks? Because that's what they are. Any positive sentiment is almost immediately eroded by some headline from Amazon or somebody else. It's gone in a flash. Why have dead money lying around in these two stocks? So, I would say, and if you're not in either of them, there's opportunities still to trade them, do swing trades and things of that nature when maybe the PE gets, too low during the 90-day, intra-quarter period. You might get, a nice swing trade out of it. And that you can do that from the short side or the long side. But the rest of the retail sector, you have very few names that aren't impacted by the, weekly Amazon headline. But I would say your leaders are going to be, your Home Depot, your Walmart, Target, to a certain degree. But the rest, are really struggling in this, in this new environment where there's no let up from e-commerce. There's no let up from Amazon. It just keeps perpetuating because, the aging demographic is falling off and giving way to the millennial and Gen X, dollars, and they tend to proliferate to a greater degree with those dollars through e-commerce. Yeah. So it's a tough sector. If you don't have to participate in it, maybe you just don't. Otherwise, do your due diligence and really understand what you're investing in for the sector. And read the transcripts, listen on the quarterly, conference calls, so that you at least know what you're in for and have a reasonable expectation from such an investment.
Yeah. Speaking of due diligence, I know that people will soon be able to go to phenomgroup.com and tap into all of the due diligence that you do, that you spend hours on a daily basis doing. So that
do.
yeah, and so they don't have to do all that. If somebody wants to get into these sectors and other sectors that you invest in and trade on a regular basis, and that you've made very impressive gains from, they don't have to do all that work themselves. Maybe they're not as knowledgeable. Maybe they don't want to be. Maybe they just want to set it and forget it, or maybe they want the education. I understand. Tell me if I'm right that these things are all available or will be very soon at phenomgroup.com. Is that right?
Yeah, absolutely. Phenomgroup.com is going to launch in the December period. We're not sure if it's the first week or the second week, but we are very, enthusiastic about, deadlining before the Christmas and Hanukkah and, those holiday periods. So yeah, Phenom Group is going to have, a variety of financial news and trading applications, chat rooms, really in-depth research reports and analytics that, those familiar with my work on Seeking Alpha or talkmarkets.com will now be able to find at phenomgroup.com. We're going to have an exclusive launch only to 1,000 individual subscribers. And once we reach that cap, we're going to shut down the subscriptions. There'll be free applications that people can, come to and see the daily news, or the economic data for the day and things of that nature, and participate in our chat forums with other traders and investors from around the world. But then, once we reach our cap, we'll reopen the subscription in 2018. So, for those that are familiar with my work over the years and appreciate the level of due diligence and analytics that I produce, it would behoove them to reach out to me, as we only have now a couple hundred subscriptions left for that VIP period, if you will. So we're very excited about it. The response so far has been tremendous. A lot of people interested. I have a good deal of followers on Twitter and StockTwits that I engage with and understand what I've done and accomplished in the market over the last several years. I'm, by nature, a volatility trader. I was highlighted, a few months back in the New York Times, And a good deal of phenomgroup.com will focus on volatility, the volatility complex and VIX ETPs, as well as the retail sector, the consumer goods sectors. And we're going to have visitors and subscribers will be able also to put their thoughts on paper, their analytics, down on the site. They can create their own profile, submit their own works to us. We have our editors read it and publish it. So they have that opportunity as well. We think it's going to be a huge success in the market and advantageous for all traders and investors alike.
Yeah, and what I want people to do is bookmark phenomgroup.com. It's on your screen right now. It's going to be in the description of this video. And look for that real soon. If you want to get in on this, what you want to do is you want to email Mr. Seth Golden, and that is seth.golden@coolinksit.com. And again, that's on your screen right now. Go ahead and send him an email if you'd like to get involved with this research. All right, if you want to be one of the VIP clients and or just get involved, they're going to have kind of a social platform, if you will. Yeah. All right, where people can actually communicate with each other as well as tap into Mr. Golden's research and his very impressive gains, both in terms of trading VIX related products, UVXY, VXX, TVIX, and so on, as well as, if you want to, you can also get involved in the retail trades, which have also been quite profitable.
Recently, I did a Target trade that went really well. I did a short on Macy's that just these are scalps. Again, I look for swing trade opportunities because, like I said, retail sector is really dangerous, right now, and I don't know when it's not going to be. So I don't want to, park money there that may not produce. I'd rather swing trade and, either take my gains or take my losses and move on.
That's a great way to do it. Also, I want people to check out Seth Golden. First of all, check out his articles, many articles, very informative on talkmarkets.com as well as seekingalpha.com. And you can just Google his name and find those. I'm going to put one of his articles that he just put out from talkmarkets.com. It's about what we've talked about today, pretty much, J.C. Penney's and Macy's. And so look for that article in the description of this video. Now, so you might be wondering, how can I also learn more on social media? Well, you can check out Seth Golden on Twitter. He tweets some of his trades. Okay, you can even follow his trades. You want to do your own research and due diligence, make your own decisions, of course, but you can see what he's trading and when a lot of the time. And that's the Twitter handle for Seth Golden is @SethCL. That's on your screen right now. Also on your screen right now is, if you're into StockTwits.com, I'm a big fan myself, and a regular user, as you might know. Check Mr. Seth Golden out on StockTwits. His handle there is @SethMarcus. All right, Mr. Seth Golden, I really enjoy having you on this program. Is there anything that I missed today? Because I always seem to miss something.
No, I think we covered it all today.
My goodness.
Really appreciate the invite again, and hopefully, this was very, informative to anybody who was, on the fence. So.
Absolutely. I learned a lot, and we always get great feedback. So feel free to leave comments in the description of this video. What do you want to see Seth Golden talk about? What do you want to see me put out in terms of content? All right. So I've been speaking with Mr. Seth Golden again. I'm sure we're going to have him back real soon, so look for that. And thanks a lot, Mr. Seth Golden, once again for coming to Looking at the Markets.
Thank you, David. Have a great day.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.